from the world of politics.
Giving the IRS the resources so that they can make sure that people who owe their taxes are paying them is a really good thing.
To the world of business.
Netflix dominates the industry. They're not going to be exempt from any of this scrutiny.
This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power. We start with a check on the markets, and joining us today is Abigail Doolittle. So, Abigail, it's been quite a week. It's only Thursday, but boy, at the beginning of the week, I thought the whole world was falling apart. Now it's come rushing back.
It really has been a wild week, David, for sure. It's hard to believe that it is only Thursday because it feels like it's been a month of trading. On Monday, you had risk assets and oil absolutely plunging. Oil at one point down 5%. Tuesday and Wednesday, a bit of a reprieve. That reflation trade, reopening trade back in gear. Tech still climbing, but less so than reflation. And today it's tech that is outperforming again, the S&P 500 essentially flat. So that tells you lots of uncertainty because it's amazing that we've had these kinds of whipsaws. Nothing has changed. Yes, there are the fears around the Delta variant and what that could mean for the economic growth. We've had some earnings reports, but fundamentally you have these big moves with not a lot of change beneath it. The biggest move, as you know, for that 10-year yield, nowhere near the 2% that we've been talking about this year. At one point, almost close to 1%. But a real wild ride.
Yeah, I'm a little worried about your prediction of 2.0 on the 10-year. It's going to be hard. But come back to that, because one of the things we saw last week was concern about inflation. At the beginning of this week, no concern about inflation. The concern was about growth. Are we over the inflation concern at this point? Certainly the 10-year yield would indicate maybe we are.
I would be surprised if that 10-year yield doesn't creep back up and that the narrative can shift back and forth. In a way, it keeps the financial system moving, dynamic, so that it's not just stuck. So right now, the concern is around the virus. It wouldn't be surprising to me in 2-4 weeks if it goes back to inflation. And today, Unilever, I should say, they reported their quarter. It was a little bit disappointing, especially their talk about inflation, the worst since 2008. They had to cut their margin prices or their margin forecast because of rising prices for the ingredients that go into soaps and ice cream and the like. And then in a very different world, D.R. Horton, D.H. Horton, the home builder, they missed home orders because rising prices, in part because rising prices shut out first-time buyers. So we're seeing lots of signs of inflation in the real world. It's hard to believe that that conversation is not going to dominate the narrative not so long from now.
And we may not be past it yet. Okay, thank you so much to Abigail Doolittle for that report on the markets. President Biden appeared at a town hall meeting on CNN last night, and one of the first questions he was asked was about rising prices.
The vast majority of the experts, including Wall Street, are suggesting that it's highly unlikely that it's going to be long-term inflation that's going to get out of hand. There will be near-term inflation because everything is now trying to be picked back up.
For her perspective on inflation and the economy, we welcome now Diana Furstcott-Roth. She's adjunct professor of economics at George Washington University. She earlier served in various capacities in government, including as acting assistant Treasury Secretary for economic policy. That was in the Trump administration. So, Dr. Roth, thank you so much for being with us. Why don't you weigh in on this almost parlor game now about inflation? Do we have it? Do we not? Is it going to stay with us?
It's very concerning that inflation has picked up so much. And now we're looking at handles that are not just 1 point something, 2 point something, but we're looking at 4, 5, almost 6%. It's very concerning that inflation has picked up that much.
So, as I understand it, there are various forms of inflation, and one thing is wage inflation, another is sort of price of goods inflation. What's going on with wage inflation? Because my understanding, you're an economist, I'm not. Wage inflation tends to be a bit stickier.
We're seeing both wage inflation and goods inflation. And yes, wage inflation can be stickier because it's harder for employers to lower people's wages than it is for stores to have sales with goods. And we have supply constraints. There's 9 million job openings right now. Employers are competing for labor. They're having to offer higher wages. They're having to offer bonuses.
One of the things we've been told by Jay Powell, the chair of the Fed, as well as other Fed speakers, is we don't need to worry as much about inflation because there's something of they call it cushion in the number of people who don't have jobs today who did before the pandemic. Is that likely to constrain inflation in the economy?
We have a lot of inflation because of supply constraints. We're having trouble getting commodities. We're having trouble getting steel, lumber, as well as people. Now, it's possible that in September, when kids get back to school, a lot of people are going to be moving back in the workforce. But we've had 7, 8, 9 million job openings over the past year, and the labor force participation rate has not risen. So some people might be deciding that they're not going to re-enter.
There's a piece in the Financial Times today you may have seen that said the Fed should be concerned as they go into meetings next week, particularly about housing, because there is an uptick in housing costs for various reasons that may really drive the inflation story. What's going on with housing in this country?
With housing, there's a lot of demand. Many people during the pandemic moved outside cities. They wanted to change homes. They wanted larger homes. With lower interest rates, it's becoming easier for people to afford to purchase these homes, which is great. But on the other hand, we have higher lumber prices, higher steel prices. Construction companies cannot get the labor they need. So those prices are getting bid up. And that's why housing costs are rising, David.
Connect this up, if you would, Doctor, with policy. I mean, you spent a good part of your time in government on policy. What can or should the government, and by that I guess I mean both the fiscal and the monetary side, do right now if we're concerned about inflation?
Well, one thing we don't need is a $3.5 trillion infrastructure bill, because that is just going to drive the shortages higher. The spending in this bill is concentrated in the first 5 years. That's going to cause more inflation as there's more competition for all these goods that the private sector wants right now. Also, the Fed needs to be looking at what it's doing in terms of its mortgage-backed security purchases, its bond purchases, its inflation rates. There is a time, as Chairman Powell has said, that they're going to have to put on the brakes. And maybe this time is now.
Should we be worried about infrastructure spending with respect to inflation? Because some economists have said, at least historically, that's not particularly inflationary, I guess, because it both increases capacity to produce and it does take more time to do and increases productivity. Is this infrastructure spending, if it happens, will it be inflationary?
I think it will, David. First of all, because it's concentrated right now. Second, because it is not productivity enhancing infrastructure spending. It's not looking at, for example, substituting via van pools for these large electric buses that are going around with only 1 or 2 people in them between 10 p.m. and 6 a.m. It's not aiming to cut down on the billions that are going to support public transit. It's not productivity enhancing. It's not going to cut any costs. And that's why, on top of the large economic growth we're seeing right now, which is forecast at about 7% this year, perhaps about 9% in Q2 when those numbers come out next week. We're putting these trillions of dollars of spending on top of a roaring economy, and that's the problem.
At the same time, some people are concerned about the coronavirus coming back and that might actually have the reverse effect. How do you analyze the offset between, on the one hand, fiscal and monetary stimulus, which is really driving the economy, and the threat of, people are calling it now, a fourth wave from the Delta variant?
Well, there is a threat, and I just want to take this opportunity to say everyone should get vaccinated. I'm vaccinated. My whole family is vaccinated. My 95-year-old father and my 9-year-old mother are vaccinated. My kids are all vaccinated. So I really think everyone should get vaccinated because that is going to avoid a lockdown in the future. But people who are getting sick right now are the ones who are vaccinated are getting less sick. They're not hospitalized. There is a possibility of another wave, but I think countries are rethinking the lockdowns because they have seen the economic damage it's doing, the harm it's doing to children from being home, from being behind on their school. So I think that another wave, our hospitalization system will be able to deal with it, and it will not result in the lockdowns that have been happening in the past.
Doctor, thank you so much for your time today. That's Diana Fritz. She is adjunct professor of economics at George Washington University. Coming up, we're going to talk with Congresswoman Nikema Williams of Georgia about the bipartisan infrastructure package and what it could mean in her home state. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, a total of about 950 people, including journalists and officials, will watch the opening ceremony of the Tokyo Olympic Games tomorrow at the main stadium. An event organizer tells Reuters that number does not include performers and athletes. Olympic organizers earlier this month decided to bar spectators from venues in Tokyo because of the coronavirus pandemic. The EU, is refusing to talk to the UK about renegotiating the Brexit deal that governs Northern Ireland. Prime Minister Boris Johnson's government warns it will suspend parts of the Brexit agreement if the EU does not budge. The Northern Ireland Protocol governs trade and market rules for the region. China is pushing back against the World Health Organization's call for another investigation into the origin of COVID-19, including a look at the lab leak theory.
No evidence can support the theory of laboratory leak from China.
The call for a probe comes as the Delta variant strengthens its grip in many regions. The actual COVID-19 death toll in India could be as high as 5 million. Even the most conservative estimate, 1.3 million, would be more than double that of the U.S., which has the highest recorded death toll from the outbreak. The numbers range from 3 to 10 times India's official count. The estimates were derived from research models and local government data. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Nowhere is there a greater need for infrastructure investment, whether in roads or in airports, than in areas of the South that are growing rapidly. Welcome now a representative from one of those areas, Democratic Congresswoman Nikema Williams of Georgia. So, Congresswoman, thank you for being back with us. Give us your take on what, if in fact they go forward with this bipartisan package, get it done, what does it mean to your constituents?
This infrastructure package means everything to my district. I represent the world's busiest airport. I represent the 8th largest transit system in the country. And yet we still have issues with making sure that people can get to job centers, and equity is included in our vision for infrastructure in this country. But when we talk about a bipartisan infrastructure package, I want to be very clear that the House version of the Invest in America Act, our infrastructure bill, was in fact bipartisan. And we don't have a unicameral government. We don't have a unicameral legislature here in Washington, D.C. We have a House and a Senate, and the House is very clear. I stand with my chairman of the House and Transportation, the House chairman of the Transportation and Infrastructure Committee, Peter DeFazio, that we're not just going to rubber stamp what the Senate sends our way. We want a voice at the table to make sure that we have the strongest possible bill, so that when we're building back better for our country, that it is in an equity-centered vision.
I'm really glad you pointed out it was bipartisan in the House. We tend to overlook that. There is some bipartisan work being done there. You mentioned equity in what you just said, and sometimes we overlook that. We think infrastructure is the same for everyone, but there are some equity issues. Why don't you go through that in Georgia?
So if you look at just the 1956 Federal Highway Act, which intentionally divided Black communities and decimated Black wealth, we're still reaping the effects and feeling the effects of it today. In Atlanta, the Sweet Auburn district and the Summer Hill neighborhoods are clear examples of the downtown connector and I-20 being built right through the center of Black neighborhoods, and it decimated Black wealth. And right now, unfortunately, Atlanta is #1 in the country for racial inequality and income immobility. And so that is something that has to change. I have a provision in the bill, the Reconnecting Communities and Restoring Neighborhoods Act, which would reconnect communities from one side of the interstate to the other. And we are creating a program so that there are grant-funded dollars that are community-driven and community-centered to reconnect communities that will make it more environmentally friendly. So this is an environmental justice bill and an equity bill built into a transportation and infrastructure bill.
So you raise a very important question, Congresswoman, because we can have appropriation at the federal level, but a lot of the money gets spent locally on infrastructure. How do you make sure that you do accomplish some of those equity goals that you set out? Does the federal government require that? How do you make sure it gets done at the local level?
So the grant programs that are a part of the Reconnecting Communities and Restoring Neighborhoods Act does require that it is community centered and that communities come together with their vision of what they want for their neighborhoods. We are beyond the days where we just come in and tell communities what is best for them. We must have community leaders at the table, local governments at the table, coming together so that our visions are in place and that communities are truly able to reap the benefits of building back better. This is not a time when you just come in and tell people what is best for them, because we've seen the impact of that. And that's what destroyed our neighborhoods, especially around the 1956 Federal Highway Act.
Congressman, I want to turn to elections if we could, because Georgia has certainly been an epicenter of some controversy about elections. You've got a midterm coming up, and you're going to have one of your senators up for election once again. It strikes me that you have the seat that John Lewis occupied, and that has some importance to it. There's a voting rights bill right now named after him. Where's voting rights in the Congress right now?
So right now, the John Lewis Voting Rights Act is still in the House, and we are having the field hearings to build the formula so that it can be litigation proof and withhold a Supreme Court challenge, because we saw what happened just a couple of weeks ago with the Supreme Court and the Voting Rights Act. And we saw what happened in 2013, which gutted the Voting Rights Act with the Shelby v. Holder decision. So we are being very meticulous to make sure that we build a formula that can withstand the muster of the courts. And we are continuing to push forward with HR 1, the For the People Act, which we passed on the House side, and it now sits in the Senate, and we're awaiting Senate action. Right now, the filibuster is a hurdle, but I am convinced that this is not a partisan issue. This is about our democracy, the foundations of our democracy, and the belief that it should not matter where you live in this country, no matter what your zip code is, your right to vote should be standardized. This is about standardizing democracy and creating a floor for voting in this country. And so we are continuing to work through the issues. We're continuing to bring people along. This fight is far from over, and we will see voting rights restored for everyone in this country. And we will make sure that no matter where you live, your right to vote is secure. And people keep telling me what can't be done, but you mentioned that we elected 2 U.S. senators here in Georgia, and folks told us that that would never happen, that we couldn't elect one, let alone 2 Democrats to the United States Senate from Georgia. And we did just that. So we're continuing to push forward. We're continuing to have the conversations and bring in the coalition on the ground and in the Senate to make sure that we pass a strong voting rights bill once and for all.
As you point out, there were those 2 runoff elections for U.S. Senate in Georgia. A lot of people were surprised at the results. But let's be very specific. You've had some changes in Georgia state law right now with respect to election. If those are not overturned by federal legislation or otherwise, do you think that Georgia can retain 1 or 2 Democrats in the Senate?
Well, I'm a forever optimist, and I also chair our state Democratic Party. So I know that we will retain both of those seats. It's going to take a lot of extra hard work. But let's be clear, no one should have to jump through hurdles to exercise their right to vote. And that's what this is about. It's about making sure that everyone who wants to access the ballot can. And so that's why I'm pushing forward with HR 1, the For the People Act, because that is the only thing that will make sure that the things that have already been placed into law in Georgia, the voter suppression law, SB 202, that was signed by Governor Kemp in a closed door meeting, that we need HR 1, the For the People Act, to make sure that we mitigate the results of that suppressive law. And so that's why I'm pushing forward with that. But in Georgia, we understand what it's like to have all of the odds against us and still persevere and still come out on top. And so I know that we're going to send Raphael Warnock back to the United States Senate, but I also understand that we're not going to sit idly by while people's rights are being disenfranchised. So that's why we're continuing to push forward with HR 1, the For the People Act.
Madam Representative, thank you so much for being with us today. That's Congresswoman Nikema Williams, Democrat from Georgia. Coming up, we need microchips, but for how long? Texas Instruments is our stock of the hour. That's next. This is Balance of Power on Bloomberg Television and Radio. We have breaking news now. There are multiple reports that websites, including DraftKings, Airbnb, FedEx, Delta, and others, are experiencing some service issues. We're not sure what's behind this. We're not sure how wide it is. We will keep you apprised as it develops in case it turns into something rather big. In the meantime, let's turn to our stock of the hour. The chip makers have seen quarter after quarter of robust growth, but Texas Instruments today raised the specter that it just may be coming to an end, making it our stock of the hour. And Dave Wilson is here with the Texas Instruments story. Dave.
Now, we've talked about chip makers before, mostly in the context of the auto industry. We know that the challenges have been there for companies to try and get semiconductors. Well, it's really a broader issue and has been for some time. You look at lead times in the industry, the amount of time from a customer placing an order to actually getting the chips. You go back to the beginning of this year, it was basically 3 months. Now you're looking at 4.5 months, a record amount of time. And the way that has played out for Texas Instruments, they say that times are lengthening for a growing number of their products, and they're having problems keeping up enough inventory to meet sort of their targets. They like to have 130 to 190 days worth of sales on hand. Last quarter, they ended with 111 days, so not so much as far as that goes. And it really bleeds into their outlook for the third quarter. I mean, if you looked at the numbers, you'd say they were pretty much in line with what analysts were looking for. But on the conference call, the company really didn't want to talk about whether the growth in the chip business that they've seen is going to peak or whether it's going to be sustained. And that caused a lot of issues for analysts, and that's why you see the shares down.
And there could be a timing issue here. It could be that some people who needed chips just ordered an awful lot because they wanted to make sure they had enough, and now it turns out they've over-ordered and they don't need as many going in the out quarters.
Well, that's the challenge, trying to figure out where the industry really is at this point. And when we talk about Texas Instruments in particular, it's not like they're just wedded to iPhones or whatever. I mean, you look at their business, industrial and automotive customers make up a majority of their revenue. So, you get a real sense that what's happening in the chip business is going to be an issue across industries. And the question becomes, how does Texas Instruments deal with whatever changes there might be in demand going forward?
It's good news for the auto companies, though, if in fact they're going to get the chips they've needed so badly.
It sure is.
Get those workers back to work. Okay, thanks so much to Bloomberg's Dave Wilson. Coming up, Congressman Warren Davidson on crypto regulation and Republican views on infrastructure. This after Secretary of Treasury Janet Yellen had a meeting with policymakers this week saying we may have to take a look at stablecoin and regulate it some more. We're going to talk to Representative Davidson about what he thinks would be appropriate for regulation of crypto. This is Balance of Power, and we are on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. The United States reported nearly 45,000 new cases of COVID on Wednesday. That's up from a low of around 11,000 just last month. The Delta variant is seen to be driving a new wave of infection in many countries. Dr. Stuart Ray at Johns Hopkins School of Medicine tells Bloomberg that there's unnecessary hospitalization and death because of the Delta variant spreading so fast among unvaccinated people. House Speaker Nancy Pelosi is defending her decision to reject two Republicans selected by House GOP leader Kevin McCarthy for a committee to investigate the January 6th insurrection at the U.S. Capitol. McCarthy accused Pelosi of an egregious abuse of power. Here's the Speaker.
This is deadly serious. This is about our Constitution. It's about our country. It's an assault on the Capitol that is being mischaracterized for some reason at the expense of finding the truth for the American people.
McCarthy has said Republicans will not participate if Democrats won't accept his selections. Wildfires on the West Coast are leading to smoky skies in the east. Strong winds blew smoke from California, Oregon, and Montana. The result was a haze that hung over New York City, New Jersey, and Pennsylvania. People with heart disease, asthma, and other illnesses were told to avoid the outdoors. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Infrastructure is front and center in Washington this week, but it's far from the only thing that's getting attention down there, as Treasury Secretary Janet Yellen met this week with policymakers and regulators to talk about regulating stablecoin. Welcome now a congressional expert on the subject. He is Republican Congressman Warren Davidson of Ohio, who serves on the Capital Markets, Securities, and Investment Subcommittee of the House Financial Services Committee. So, Congressman, thanks so much for being back with us. As I say, Janet Yellen on Monday met with regulators. Last week, we heard Jay Powell, the Fed chair, saying he's concerned about stablecoin particularly. What's the issue here, and in your opinion, what needs to be done?
Well, we've tried to get regulation for this space since I've been on the committee since 2017 when I first came on the committee. And really, stablecoins are supposed to represent a stable store of value. So while it's tokenized, it also is pegged to the dollar. So sort of like a money market fund, the net asset value is supposed to be 1-to-1. The token is supposed to represent $1 US. And what we found out recently is Tether is backed by commercial paper in a very similar way to money market funds. And so that's really driven some additional interest to say, hey, their disclosure that they have commercial paper doesn't go as far as a money market fund would be required to. And essentially, since it's backed by securities, isn't it effectively a security? And the fear here is that the Fed would try to regulate, or regulators with Treasury, Fed, SEC, would try to regulate all stable coins in the same way. So I mentioned Tether. Let me mention another one, Paxos Gold as an example. It's backed by 1 ounce of gold. So the token represents 1 ounce of gold. 1 ounce of gold is put in storage for every token issued. And oddly enough, the value of it tracks with gold. So that clearly isn't a security. And so that's the quandary. It really is high stakes whether regulators get it right.
So, Congressman, give me a sense, because I don't understand it the way you do. Is the fundamental risk to the person who's buying the stablecoin, that is to say, they actually may not have what is supposed to back it up, and therefore they'll lose money on it? Or is there also a macroprudential risk to the system overall? Can you have effectively sort of like a run on the bank if something starts to fall apart?
Yeah, you could have some of both. So if let's say you put, stable coins on your balance sheet, if you're a corporation, you wanted some part of your treasury to be held in a tokenized way, maybe for payments or whatever else. In the same way that people held, money market funds, they want to treat it as cash, but you can at least get a little bit of yield on it, and that's part of the same appeal. When the 08-09 recession hit, some money market funds broke the buck, i.e., they were worth less than a full dollar. At a time when people needed to turn them into something more liquid. And so that's a big thing. And then sort of what Chairman Powell alluded to in his testimony before our committee last week, he said, look, if there were a central bank digital currency, it might take away the need for stable coins or crypto. I think he's completely wrong on that. But that's the concern that a lot of people have, is that these alternative payment systems become efficient enough, it decreases demand for dollars. And so that's a systemic risk that the Fed and the chair of the Treasury and others are trying to manage. Congress has certainly given attention to it in recent hearings as well.
Let me turn back to that other big issue in Washington right now, which is this infrastructure, particularly the bipartisan, as it's called, proposal on infrastructure. We heard President Biden yesterday say he thinks that they will get something through the Senate next week. You're sitting up there on Capitol Hill. What is the likelihood we'll get something done before the August recess?
Well, Senator Rob Portman is leading the Republican negotiations. He's a senator from Ohio. I spoke with him earlier this week. He certainly wants to find a way to do a deal. Republicans broadly support infrastructure when you're talking about actual infrastructure. And so that's an encouraging step. They're focusing on core infrastructure. It's not coincidental that Joe Biden was in Cincinnati, Ohio. The Brent Spence Bridge featured prominently in Barack Obama's ads in 2012. And so when I first got elected to Congress, I spoke with Senator McConnell about that particular bridge because it goes over the Ohio River. It connects Ohio and Kentucky. About 3.5% of U.S. GDP flows across that bridge. So it's high stakes and it needs attention. We have similar things like that all over the country. Memphis has had to close their interstate highway system recently. So there's broad support for true infrastructure. And the thing that presents an opportunity here is the COVID funds that have already been sent out. Thankfully, so far, these COVID funds haven't been fully tapped, and lots of communities are saying we'd like the flexibility to be able to use those dollars for infrastructure. So there may be the makings of a deal that could do that without raising taxes, without increasing new spending. And of course, you know, there's a dance there between, well, okay, what else has to go into the deal? I think everyone's rooting for success, but kind of recognizing with thin margins, it might not happen.
Okay, thank you so much, Congressman. Always a pleasure to have you with us. That is Congressman Warren Davidson, Republican of the state of Ohio. We're continuing to watch the situation of website outages. It's a growing list now. Companies including Delta, Home Depot, FedEx, and DraftKings are experiencing outages. We're going to bring you more information as it develops. This is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Union Pacific announced its earnings this morning, doing better than expected right across the board. Welcome now, Union Pacific CEO Lance Fritz. Thanks so much for being back with us, Mr. Fritz. I'm a journalist. I don't get to root for anybody, but I think if I were CEO of Union Pacific right now, I'd be pleased. Are you?
Yes, I'm very pleased with the quarter that we put together. It's a testament to the team and what they're doing with the industry's best franchise. We're really making it hum this quarter.
So give me a sense of where the growth is coming from and what you see in the out quarters.
Yeah, the growth in the economy right now compared to last year is really across the board, and it's quite strong. We see it in consumer demand. It shows up in our intermodal products. It shows up in automotive, in housing, which for us is lumber and construction material all the way through to cement. It's showing up in steel and the inputs into industry. It shows up in plastics, food and refrigerated beverage, grain. It's really kind of hard to find a commodity right now that's lower year over year. And I think that strength is going to continue into the second half of the year.
At the same time, we do have some supply chain problems, including at some of the ports. And as I understand it, there have been some issues about getting shipments from the West Coast into Chicago, for example. Tell us about that.
Yeah, David. So one of the manifestations of having strong consumer demand is consumers are pulling a lot of containers from Asia into the West Coast ports. Early in the year, you'll recall that created some backlog at the West Coast ports and ships were being held off dock. We put more capacity into the West Coast. We increased our train starts to move those boxes inland and helped get that backup kind of relieved. The problem is those boxes now went to our inland ramps like Global 4 in Chicago, and there's not enough capacity to take them off our ramp and into the distribution warehouses. So we've run into an amount of delay and dwell on the inland ramp that has to be addressed now.
So the way you describe that, Lance, it sounds like it's a timing issue. It's sort of like a river and you see it's overflowing upriver and then it sort of works its way on down. Is that right? And if it is a timing issue, when do you expect it to be resolved?
It's a great question, and I do believe it's a timing issue. It's going to be resolved when capacity matches demand. And capacity here, I think, is mostly about labor. That's in the form of truck drivers. We call that dray drivers when you're moving a container from an intermodal ramp into a warehouse, and also warehouse labor. So both of them have to match the kind of capacity they need to handle the box volume that's coming at them.
Are those wages going up to get those workers back?
We do see that. It's not happening in our industry specifically, but we do see in the trucking industry, wages are significantly higher in order to attract the workforce. And I still think they're having some trouble.
So you got a little attention from the President of the United States, Joe Biden, recently with this executive order on competition. And you'd think that it all had to do with big tech. It doesn't. It also specifically addressed some railroad issues. Give us your reaction to what the president had to say to his agencies, basically saying, take a harder look at some of these mergers.
Yeah, so David, you know the role that railroads like Union Pacific play in the U.S. economy. We do about 40% plus of the inner city tonnage. We do it by providing really great, high-paying union jobs. We help other companies reduce their greenhouse gas emissions, and we pay for it all ourselves. We invest in our own infrastructure. So our reaction to the executive order is we really encourage the administration to use a whole of government approach when they're thinking about their policies, because the executive order would kind of get in the way of our ability to help them with U.S. infrastructure, to help them make the economic recovery a labor-centered economic recovery, to help address greenhouse gases and climate change. So that's our point, that we've been in this business for a long, long time. We respect and work very closely with our regulator at the STB, but we really want to encourage the administration to think holistically about some of the issues that they raised in the executive order.
So unlike you, I haven't done a detailed economic analysis of your industry, but at a top line level, I've read we've gone from 1980, about 33 class 1 freight lines to 7 today. That sounds like a lot more concentration. Is that fair or is that unfair?
It is fair that the industry consolidated, and it consolidated because the industry and government wanted it to. Back in the early 80s, many of the Class 1 railroads were very poorly capitalized and were not keeping up with their infrastructure. So through the Interstate Commerce Commission, now the STB, there was an effort to kind of enable the kind of consolidation that you've seen. As a result, we are a much healthier industry. We're putting in $25 billion plus a year as an industry, Union Pacific alone putting in $3 billion plus, in order to have robust, safe infrastructure to support the U.S. economy. All that time, real pricing to our customers dropped by 44%.
So let me get out over my skis and probably in trouble here and talk about reciprocal switching, which is something that's very much, I think, in the administration's mind right now. There is reciprocal switching in this country. I think there's more of it in Canada, but I think they want more of it to encourage more competition. Are they right to say that we can have reform when it comes to reciprocal switching, which, as I understand, is charging one another, railroads, to use one another's tracks?
Yeah, reciprocal switching, what is really in its form forced open access, is not good for the industry. Most importantly, it's not good for the customers. It's a situation where, to your point, interchange would happen where customers demand it to happen, where in a lot of places there is not capacity for fluid interchange. It would force us to rethink our transportation plans, which right now are all about being reliable and efficient and safe, and they'd start having to change to meet customer whim. And in the end, it would kind of benefit a very small number of customers, and everybody using the railroads would get the negative impact of a less efficient, less investment in the overall infrastructure. We think fundamentally it's a flawed idea.
Okay, Mr. Fritz, thank you so very much. In case you missed the lead, they exceeded all expectations in their earnings today. I can't congratulate anybody, but you should know they exceeded the expectations. That's Lance Fritz. He's Union Pacific Chairman and CEO. Coming up, we talk with former head of the House Democratic Caucus, Joe Crowley, about what it will take to get the bipartisan infrastructure bill through the Congress. That's next on Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Senate Majority Leader Schumer didn't get the result he wanted from that cloture vote yesterday, but President Biden says that he is still hopeful that something will get done next week. And some Republican senators have signaled they sort of agree with him. We welcome now a veteran of the legislative process. Joe Crowley served as Congressman from New York for 20 years, rising to head the House Democratic Caucus. He is now Senior Policy Advisor to Squire Patton Boggs. So, Joe, thank you so much for being back with us. You know, for those of us who haven't spent time up there, it just is impenetrable. At least speaking for myself, I don't understand what's happening. What is going on? I understand it's the Senate side, but you understand how it works.
Well, I even think for many of us who spent considerable years on the Hill, it can be a bit confusing. But what you've seen happen over this last week is an attempt, I think, by the Senate Democrats and their leader, Chuck Schumer, to prod this group of 20, or this G20 within the Senate, comprised of 10 Democrats and 10 Republicans. And why that's so significant, David, in order to pass a bill in the Senate, you need a supermajority. You need 60 votes, not just 50 votes. And that's the rule of the Senate. And what Senator Schumer attempted yesterday was to get them really to move in terms of finalizing their agreement on this hard infrastructure bill. And as you noted, the good news here is that not only what the president said in terms of his experience in the Senate, but those 10 senators from the Republican side in particular said that they're narrowing the gap of issues, and they come to closure in terms of some of the standout issues within the infrastructure bill. And they've indicated by next week, as early as Monday, they can have an agreement. I think that's what Senator Schumer is looking for. That's what Senate Democrats were looking for.
Joe, you know better than I, there's no deal unless there's a deal, right? And so until it's closed, it's not over. But as you look at it right now, are there any showstoppers in there? I mean, what might derail it? Because as you say, both sides within this relatively small group of bipartisan senators both seem to say, yeah, we're going to get there.
Yeah, well, there certainly is this push by the further left who want climate change language in the hard infrastructure bill itself. And there doesn't appear to be any at this point, or at least significant climate change language within the hard infrastructure bill. We anticipate, because the Senate and the House Democrats have been moving on a dual track, both this hard infrastructure piece where Speaker Pelosi and Leader Schumer have been telling their caucuses to, through the regular order, through the committee process, give us your bill on hard infrastructure. And at the same time, we know they're working towards what's known as a reconciliation package, where they would only need the majority of Senate Democrats to vote on a bill to pass a much larger bill on soft infrastructure package that would include things like in-home care, for elder care, for child care, for free, potentially free college tuition for two-year colleges, et cetera, those types of things.
Talk about that reconciliation package, which is separate and much larger, as you say, includes what some people call the soft part of infrastructure, the human part of it. Are the Democrats going to come together and back the president? I've talked to some who said, look, in the end, particularly first-term president, his own party will back him, even though you have some moderates who are expressing some skepticism.
I'm confident that when push comes to shove, that they will be there for President Biden in that request, but it's not going to be without some pain, especially for those marginal members, as you mentioned, in the House. Remember, the House only has right now a 4-vote margin, maybe down to 3 votes. And that makes it very difficult for those more marginal districts where they face tough re-elections. They don't want to have multiple votes on these issues. They're looking for 1 vote, maybe at most. And that's still going to be very difficult for them. So it's keeping that in mind, that balance between the far left that wants to see more, things done on infrastructure to address the issue of climate change, and at the same time, more of those moderate members who are really concerned with the price tag of these bills going forward.
So, Joe, explain one thing in general up there that I've read about, and you just alluded to it. You don't want to go on the record unless you know you're going to win. If you're running for re-election, you don't want to go out and waste a vote and take a position that might be controversial. How do you do that when you're trying to get 435 members in the House and 100 members in the Senate to say, I don't want to vote unless I know it's going to be for some purpose?
Well, I think even Speaker Pelosi has made it clear that she's not interested in moving forward until they know that there's confidence that the Senate Democrats will take up a reconciliation package, that soft infrastructure bill, sometime in the future. They're not looking to do these kind of one-off votes to pressure right now, knowing that it's ultimately going to come down to the Senate in terms of their numbers. It's not going to be the House that's going to determine that. We know that it comes down. What will it take to get 10 Republican senators to vote for the hard infrastructure bill? And what will it take to get Democrats to be unified on a 50-vote bill for the soft infrastructure package? That's really the balancing act that's going on here right now.
Fiendishly complicated. Thank you so much, Joe. Really appreciate it. And for those of you watching on TV, I'll tell you on radio, he's got a Rickenbacker and 2 Telecasters behind him, I think, there in his study. Okay, I'm delighted to say Joe Crowley's going to stay with us on our second hour of Balance of Power on Bloomberg Radio, and we'll talk about the midterms. This is Bloomberg.